All right, guys, we're here with the amazing Nate Jomaa today, extraordinaire, I should say, lender extraordinaire. And we've got a problem right now, maybe even a couple problems, right? We've got prices that are a little bit higher, we've got rates that are a little bit higher. So buyers are looking for creative financing solutions. And honestly, if you're aware of these creative financing solutions as either a seller or a listing agent, you've got a little bit of an advantage over everybody else because you've got something to offer that not a lot of other people are going to understand. So today, Nate is going to go through a lot of these different things with us. I'm personally excited because, Nate, you gave me the title. You said, hey, let's do the podcast, which I think is awesome, but I have no clue what you're about to talk about. So I'm fired up about this, man. What do you got for us?
Yes. So there's obviously an issue, like you said, right now. There's a lot of people out there that think that one of two things are about to happen. They think that we're either about to see some crazy crash where home values are just going to plummet and they're just going to be able to go in and scoop up a bunch of properties. And if you are one of those people, newsflash, not going to happen. We can talk about that later. Give me a call. Then there's another group of people that think that home prices right now are overpriced, and they think that there's nothing that they can do to get into the market because they can't afford it. And the truth of the fact is they absolutely can. So maybe a conventional, and when I say conventional, I'm not speaking specifically about a conventional loan, but a conventional type of loan may not be their best fit. Yep. But there are a lot of creative solutions that we have available. And a lot of people don't know about these things. And that's what I'm here to do today, Joe, to help you and anyone that's watching, anybody that's listening, know about these other options that are out there.
All right, my man, let's hear about them. I'm excited.
All right. So the first thing I want to get into, a lot of folks that are self-employed, earn a 1099, don't have what you would call traditional income, think that they're out of the market because they're not able to show the income that they need to show. Well, there's two or actually three different pretty creative programs that are out there that can help people like this. So the first one is called a bank statement loan. And basically it looks like this. There's going to be either 12 or 24 months of bank statements that we'll use. And there's two things that we pull out of those bank statements. We look at the deposits monthly and the withdrawals monthly, and we average it out. And we're going to back out things that are not business expenses, right? If we look on there and it looks like there's some things that couldn't be classified as a legitimate or a true business expense, we might pull those things out too. So caveat to that. But we just look basically at the cash flow in the bank statements for 12 or 24 months, and we set an income off of that. So that's a huge win for folks that have great business profits, right? If there's a lot of money moving through those accounts, that's a huge win for these people. We can make an approval based on that. There are certain criteria, obviously, credit, debt to income. There's things involved. So we'll talk through the specifics. Another thing that we can do that's similar to that, but it's called a 1099 only program. And it's just like it sounds. We literally will ask for 1 year or 2 year 1099s, and we'll base the income off of the 1099s. We don't need the tax returns. We don't need to see the business bank statements. We will look at the 1099 that you are obtaining yearly, and that's what will drive to get your income going. And then the third one, which is newer and I'm pretty excited about, is we will look only at a P&L, the profit and loss. We will base all of your income off of an accounted, meaning it has to be done by an accountant. Yep. You can't do self-reporting P&L. So those are three options for those folks that are self-employed that may think that they're priced out of the market because they don't have the necessary income on paper, but we have creative ways to get it going.
I love that you say that too, because I can't tell you how many people have come to me and said, you know, Joe, I really want to buy, but I talked to the lender and they said that I just can't until I get a couple years of this, or I need to be W-2'd or whatever it is. And when it comes down to it, you've got lenders who know a little bit more about their products and you've got lenders who don't. So being with a lender who really knows those different options and honestly has those different options. There's also, I always use Wells Fargo as an example, man. Wells Fargo sells Wells Fargo products. That's it. It doesn't sell anything else. So if Nate's got some unique, cool product, Wells Fargo might not have it, right? But Nate is a guy who doesn't just have Nate products. he's got all these different lenders all over the place, and he can go pick and choose. So what might be great for me might not be a good fit for you. He's going to go find something from another lender that's a good fit for you. So I love that you bring that up, knowing that you're working with somebody who's got all those unique options. I mean, it sounds like I'm pitching. I'm not trying to pitch you. I'm just saying, whoever your lender is, pick somebody, in my opinion, who's got a slew of different options in front of them. Guys, while Nate's going through some of these different options, the comment section is open. So whether you're watching on YouTube, Facebook, whatever it is, if you want to bring something up or you got a question for Nate, certainly bring it up and I will ask him. What else you got, Nate?
Well, I want to piggyback off of something that you just said, Joe. So not picking on Wells Fargo or any other bank, but to your point, yeah, they are in their box and that is the product and the offering that they have available. And the same goes for your direct lenders. Your direct lenders, whether they're a bank or a mortgage company, they're going to have their products, they're going to have their offerings, and it may not be expansive enough to offer something for everybody. So if you're not going to work with the Nate Jomaa mortgage team, find yourself a mortgage broker like the Nate Jomaa mortgage team.
I agree.
We can go out and we can go to all of these lenders out there that have these creative financing options for you. So brokers in this scenario, brokers are absolutely going to be the only ones that can bring some of these programs to you. So make sure that you're checking with your mortgage person to find out if they are a mortgage banker or a mortgage broker.
I like that. Okay, so what other issues? I always think of this stuff, like you're bringing up these different products, but I think, what issue does a person have that my product can solve? So like the issues you just brought up are, I'm self-employed, I haven't been self-employed long enough, or maybe I have been, but my first year I made 20 grand and my second year I made 200 grand. That's going to be a challenge if you don't have that type of program. So what other, situations might I be in or problems might I have that you've got creative financing solutions for?
Good. So another thing that might come across is maybe you're an investor or you want to be an investor. You want to get an investor type of loan product. But it's tough now because of the fact that home prices are higher across the country. And it's not as easy for you to be able to show cash flow, right? You have to qualify to buy the property. You've got to find a tenant. You've got to put them under a lease. It's a little bit more challenging. And when you don't have a ton of extra income, that's when the squeeze comes in. But there's other programs out there that just look at the cash flow from your investment property. So there's investor cash flow programs as well. And there's various ways that gets employed. But basically, it's like it sounds. We look at what is your mortgage payment on that every month, and what are you collecting as a guaranteed rent. So it may not work that way on a short-term rental, Joe, but if you've got a long-term rental where somebody's got a 12-month lease or 24 months or 36 months, we can use that and we can build your eligibility to afford these investment properties off of those. So the caveat is you have to have that lease possibly in hand in some of the programs. Other programs will just use a comparable rent schedule when we get an appraisal back. So there's different options, different ways that we can do it. So if that's something that's interesting to you, then we can definitely look at that on a one-to-one and find out which lender has the right program to match you up with.
And that's exactly what the guy I sent you yesterday, right? That buyer. Cool story, by the way. That kid contacted me. He's 20 years old. He's got 45 grand that he saved up. He's making over 100 grand a year. He doesn't have a lady. He told me that like 3-4 times. He's like, I don't want one. They're going to slow me down. I'm like, yes, get it, buddy. So he wants to start his real estate portfolio. And I was running numbers with the guy and he got it, man. He was getting it. We started making a spreadsheet for him and the guy was just on top of it. So it was pretty exciting. But I'm betting that's exactly the conversation you're going to have with that kid.
Yep.
Yeah.
Exactly.
So tell me, what else you got? Any other great ideas?
Yeah. So then there's other things out there that will help a buyer. And I believe it's also a help to the seller to be able to get more buyers that might be qualified for your home. And so it's easy for you to have a home that's listed for a period of time and you say, hey, we're not getting enough traction. We're not getting enough views. We're not getting enough showings. What can we do to make this more appealing? You can say, well, we can lower the listing price, right? That's one option. If you don't want to necessarily go that route and you want to try to find something that's maybe in the middle, you can consider a few things, offering seller paid concessions. So what does that mean? That means that as the seller, you are agreeing in advance that you're going to provide some monetary value to the buyer of that property that they can use toward their closing costs, toward their down payment, toward a rate buy down, toward whatever they want to do. You can leave it open for them to be able to do with whatever they wish, or you can be specific. If you want to offer them, say, $10,000 toward a rate buy down, so then they can take that $10,000 and they can talk to their mortgage broker and they can find out what that rate looks like if I'm able to buy it down by $10,000. In some cases, that might only move the needle 0.25%, 0.75%. In some cases, it'll move it a full percent. It's going to be a case by case. And that's an important thing that I want to hit on right now, in case anybody doesn't understand how this works. There's no set agenda or number or metric that says $10 buys the rate down by this much, $1,000 buys it down by this much. It's all the price. What is the price of that rate? And that's going to vary borrower to borrower, lender to lender, day to day. Okay. Yeah. So I can't tell you that $1,000 buys you this much off of your rate or reduces your rate by this much. It's going to be a very specific case by case.
I'll tell you what I've done in the past as a listing agent is I'll just call you and I'll say, hey, for whatever we're willing to give up, how much would that buy us down on rate today? And then what I would do is I would just say, hey, we're willing to offer whatever it is, $6,000 towards a rate buy down, which is roughly X%. And I'll just throw the word roughly in there. And it will roughly be that amount, but it will change here or there depending on it. But now you're offering something that if you've got I don't even know if I'd say savvy buyer's agent, just an average buyer's agent, they're going to understand, okay, I'm not 100% sure what $6,000 is going to get us, but we'll find out, but it's roughly this amount that was based on whenever he listed this property. And honestly, right now, I'm going back and forth now I talk to sellers and buyers. You talk to buyers all day long. Let's just say you've got whatever the number is, it really doesn't matter. $5,000-$10,000, whatever that number is. What is more attractive to buyers right now? Is it getting some of the cash that they'd need to take out of pocket covered? So now instead of needing $15,000, they only need $10,000 or whatever it is. Or is it taking that and instead of covering those costs, it's buying down that rate, which isn't going to help with their upfront cash, but it's going to help with that monthly payment. What do you think is more attractive to a buyer right now in this market based on the conversations you're having?
Every buyer is a little bit different, Joe. So there's going to be some buyers that see a huge appeal in the long game. So they know that their interest over the course of the next 5 years, 10 years, however long they're going to be in the house could be diminished by this much if we buy the rate down. And then there's going to be another camp of people that are saying, hey, if I can save $5,000, $6,000, $7,000 up front right now, what else can I do with that? Might be I can repaint my house. Might be, I can pay down this car loan that I have and save myself some money every month. So it's really going to depend on the buyer. Everybody's going to have a different plus and minus, and it's up to them to decide which one makes the most sense for them. But as a seller, if you're offering that concession, that's an attractive thing for buyers because to your point, they can either use that cash to pay something down in terms of the rate, or they can take that cash, put it in their pocket and use it to spruce up the house, to buy some furniture, to do whatever they want to do. There's advantages, and all of them can be tied back to the home and the household, whether it's saving them monthly expenses because the rate got bought down, or they're paying off some other debt because they were able to keep that money in their pocket, or they're able to put some money into the home right away.
Yeah, so knowing that, because I would have said the same thing you just said. I'm interested in how you said that. So really, for me, the presentation as a listing agent is important, right? So the broker remarks, I'm going to put whatever it is, $5,000 from the sellers to cover, and then I'll list out the different things, right? To cover closing costs, prepaids, rate buy down, or whatever else the buyer would like.
Right.
I think, though, too, it's important to know as a buyer or maybe a newer buyer's agent, when you see seller willing to pay $10,000 in closing costs, just know that seller does not care what you do with that $10,000. As long as the lender can close on it and it's legal, they don't care what you do with it. They are trying to incentivize you. So if your buyer has the cash, but they're worried about the monthly payment, All you've got to do is call that agent and say, hey, do you care if we use that for rate buy down? I'm going to call my lender right now and find out what that would do for us. That agent doesn't care, and those sellers don't care. They know they gave up 10 grand, so just write it in as a rate buy down, or vice versa. If they're offering rate buy down and your people don't really care about the monthly payment, but they're tight on cash, use it to buy the closing costs down.
Yep.
So what else you got?
So in that same vein, but a little bit different, there's a program that's out there that's offered by some lenders that's a stair-step type of loan. It's called a 2-1 buy down or a 3-1 buy down. And basically,
I want to stop you. I want to ask you, man, I did not hear about this ever until like 6 months ago. And now every lender is talking about this thing. Is this something that just recently popped up, or have you seen this in the past?
No, it's been around for a while.
Never seen it.
It hasn't been really a attractive tool
because of the market. Yeah.
Right. So it hasn't been an attractive tool. I mean, somebody, a year ago trying to bid on a house, there were 20 contracts, within the first 20 minutes.
Yeah, sorting out for nothing.
That's a little different. So, it's been around, and it's one of those things now. It's in real estate, in mortgage, these tools are out there, but they're only useful tools if there's a use for them, right? Yeah. That goes with anything, with any bell or whistle that you or I can buy as a real estate agent or a mortgage lender.
Yes.
There's a ton of stuff out there, but not everything's useful in every season. So right now it is a useful season for this. And this is what this looks like. It's a very interesting offer for a buyer and a seller. Maybe I'm biased because I don't sell real estate, but I do mortgages. But I think that this is a huge advantage for sellers too. And I'll explain it to you. So it's a standard 30-year fixed mortgage. There's nothing weird. There's no adjustments to the rate. It's a very normal loan. However, what happens is the seller subsidizes the rate payment for the first year or 2 or 3, depending how it's structured. Okay. Yep. So Joe, you're a seller and you've agreed that you're going to do this 2-1 buy down for, whoever's coming to buy your house, and I'm Mr. Buyer. So I come in and I qualify for a 7.5% interest rate, 30-year fixed. That's my rate. What you do as the seller is give a predetermined amount of funds, and we can talk about the math on that if you'd like, but I want to start with just breaking it out. You tell me a predetermined amount of funds that is going to be held in escrow when I close. So not escrow at the title company, but escrow with my loan servicer, who I'm making my payment to. And it allows me as the buyer in the first year, if we're doing a 2-1 buy down, to pay a rate of interest that's only 5.5%. So that's where the 2 comes in.
Yeah,
I'm locked in at 7.5. You're helping me subsidize where my payment as the buyer for the first 12 months is only at a 5.5% rate. So just for the sake of numbers, let's say that my full payment is $1,500, but with your subsidy, my payment out of pocket right now is only going to be $1,000. So every month I'm going to pay $1,000, whereas my actual payment's $1,500. So at the end of the year, that's what, $6,000 now that I did not pay as the buyer that you've subsidized. So you put $6,000 aside, Mr. or Mrs. Seller. The next year it goes up 1%. Again, it's a fixed mortgage at 7.5. Nothing funky or weird or, So the next year I'm paying 6.5% interest. But again, I have a 7.5% rate. So I have to have that subsidy from you, Mr. or Mrs. Seller, to buy my rate down for that period of time. So that at the end of that year is another $3,000. So now we're at a $9,000 seller concession that allows me as a buyer to basically have a $500 savings in the first 12 months and maybe a $250 savings for the next 12 months. So for me, I'm like, heck, I just saved $9,000. I put that $9,000 toward getting new curtains, new couches, got a new fridge. Hey, I got a new washer and dryer. All these things that I can use that for makes me feel great. I got in with a lower payment, and you as the seller only had to come out of pocket. In that scenario, $9,000.
Yeah, and I'll tell you, comparing it to just a 1% buy down, but for the life of the loan, we did the math the other day, and I don't remember what it was, but it was significantly cheaper as a seller to offer the 2-1 buy down.
Exactly.
And up front, it's more attractive. So if you've got a buyer who is only going to stay there, if you're the buyer and I'm only going to be here for 3-4 years, it might be better to get the 2-1 buy down than it is to get the 1% over the life of the loan. You'd have to look at the time you're going to get out and crunch the math. And it also saves the seller money. And really, this is how I think about it. That buyer has a 30-year fixed loan at 7.5%. All you're doing as the seller is saying, let me crunch the math to see what it would have been if you would have been at 5.5% the first year, 6.5% the second year, and then from then on you're at your normal rate. Whatever that savings would have been, I'll cover it. So I'm making it look like you've got a 5.5 and then a 6.5. It's like a step-up loan, right?
Yeah, it's exactly right. And I have a spreadsheet that walks us through that in seconds, awesome. Literally.
Yeah. Yeah, and it's really helpful. So whether you are a listing agent wanting to help your sellers offer this and you want to be able to clearly communicate this, or if you're a buyer that wants to ask for it in a negotiation, that spreadsheet, reach out to Nate at any time. What is it? Nate at natejomaa.com?
Nate at natejomaa.com. Yep.
Yeah, and you can ask him for that, and not only will he give it to you, but if you want, you can schedule a call or a Zoom, and he'll walk you through it.
Yeah, exactly. You can grab me anytime at Chat with Nate if you want to get on my calendar. If you want to Zoom with me, then you can set it up right there. So chatwithnate.com.
Chatwithnate.com. That's awesome, man. Well, listen, this was some pretty good stuff. We've got a lot of people looking for anything they can do right now to help themselves financially. And you've also got, with a softening market, sellers who are looking for ways to present their home better, to be more attractive. So this isn't just a buyer thing. This is a great buyer and seller thing. If you are an agent trying to become better, this is great for your tool belt. And like Nate said, 12 months ago, we had different tools in our tool belts. And they were tools that honestly we hadn't used in a while, right? Because we didn't have that type of market. Now you're going to see new tools coming out. If you are serious about this industry and you're serious about your career, you need to find a guy like Nate, take him out to lunch and ask him all these types of things, right? He will fill your tool belt. Bud, you got any final comments?
No, again, if you have any questions, you can leave some comments here. Comment after the video has been posted if you've watched it, and then Joe and I can get in and answer any of those questions for you. And again, if anybody wants to find some time on my calendar to pick my brain on some of this stuff, chatwithnate.com. You can set it up there. It can be a Zoom. It can be a phone call, whatever works for you.
All right, man. Well, I appreciate it, guys. Thank you so much for joining us. Have a fantastic week.